Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita Khemka. Well, we have achieved that major milestone of 20,000, which really we missed by a whisker back in July. But now we did hit that 20,000 mark. Just ended shy by 4 points from that mark, but 20,000 milestone has been hit finally since mid-July. July 21st was the day when we came pretty close to that mark, 19,991, where we were at. But today, of course, that major milestone has been achieved. Today we have quite a few sectors. In fact, all the sectors in the red. Mid and small cap party continues. Small cap index was up 1.5% or thereabouts. On the Nifty, we had Adani Twins, Axis Bank, Power Grid, Apollo Hospital, Maruti. Lots of gainers. Just about 4 losers in today's session. Coal India, ONGC, Bajaj Finance, as well as L&T. But to make sense of where the markets are headed from here, what next for the markets? Let me first get on board Sanjeev Bhasin of IL Securities joining in this afternoon. Thanks a lot for coming and sharing your thoughts with us, Mr. Bhasin. Early Diwali on Dalal Street. What are your first thoughts on this major milestone being achieved by the markets?
Yes, early Diwali, early Christmas, early New Year, whatever you may say, but the party has just begun. And Nandita, you must take credit or give me credit that couple of times I have come, when there was extreme pessimism and I told you we will hit new highs in September. Now, I didn't know it will come so quick, but that's just the starting point. It tells you that, it's an historic event of G20, which has put India in the front line. And now you have enough fodder for going ahead, because corporate results and when in my last 34 years have I seen PSUs perform like this, whether it's defense, whether it's power, whether it's rail stocks, and it was just a matter of time before the large cap started to pick up. So I still think that there will be a little bit of volatility, but September may turn out to be a super month as the last month has been, and maybe more index specific stocks will start to do well with the bank Nifty leading.
Looks like, September will be different this time, given the fact that historically September has been a fairly weakish month for the markets. But looks like this September is going to be a different one for Dalal Street at least, because given the fact that global cues, we've started ignoring the global cues, so to say. Every day when I, do my morning show, I always say that the global market cues coming in are fairly mixed or subdued, but we tend to ignore those, and we have been rallying for a 7th day on the trot, Mr. Bhasin. Looking at the mid and small caps as well, the party has been unabated, but would you say the valuations, at least in the broader markets, have gotten a little too stretched now?
Well, that is typical of a bull market. You will extend yourself to the heights of optimism, and in bear markets you go to the heights of pessimism. It is not your job to time that. As an anchor or a journalist, you will always call for caution and other things, which we will also. But the participation is the main thing. If you own stocks, only then you are good. Why are you seeing gold at 62,000? It's because from you, from your mother, from your grandmother, they all held gold from 4,000 to 60,000. The party only came maybe after 20 years or 30 years of holding. Similarly, stocks may be expensive now, but PSUs were beaten down to pulp, and they're just getting their first wave of getting recognition. So I still think there will be a lot of upside. But yes, like you said, there may be a little bit of froth all. And please, for once at least, be Indian, buy Indian, and be proud of an Indian, because we always miss a lot of the weather and the global synchronity because of the US and other markets. China is in a bear market, the US is fighting with yields, and the best demographic premium is India. We set the tone amongst the G20, and we are raring to go. So proud to be an Indian and proud to be at 20,000, but that's just a number. There's miles to go before I sleep.
Right, 20,000 is just a number. We'll have to see what the next milestone is, Mr. Bhasin. But, looking at the sectors that have outperformed since July 21st, that was the time when we hit a record high of 19,991. We've seen the PSU pack do well. We've seen Realty do well. But banks have just about started participating. Do you think there's a renewed, up move when it comes to the Nifty Bank Index?
Well, you know that HDFC Bank, because of the merger, is now a very large heavyweight, and it has a lot of weightage, and that has just started to perform, just like Reliance in the other heavyweight. And I think that they both are now poised to take us higher. We are very, very bullish on Reliance and some of the select banks. We have a more more weightage on some of the large cap banks like ICICI and Axis, but PSUs have been the darlings of the market. And if you just owned anything from PSU banks to power to defense to railways, you have been laughing your way to the bank. So I think, like you rightly said, it may be the bank Nifty which will also go to new highs. And along with that, because we realize that RBI has been a very, very smart, the smartest of central bankers, who's been able to control the rupee, bond yields, inflation, and yet keep rates within check. So I think banks' numbers are going to be strong. Credit is expanding. We are at the cusp of the festive season, and I think they will be a proxy to credit growth, which will come in the next few months.
Right, and what are your thoughts on the FMCG pack, Mr. Bhasin, given the fact that we've seen deficit rainfall, monsoon, of course, has been patchy, and there are question marks as to how well the rural demand will pick up. Do you think this is one pocket that one should avoid at the juncture?
Well, yes and no. You have to be stock specific. So if I could take a name, it would be Consumer Electricals Havels. Havels is a very stock very close to my heart. I've had it since 30 years. And now the management just came out with commentary that they are extremely bullish. They've transformed themselves from not just being a halogen player, but they are in every part of the consumer electricals. And with Diwali and other festivals, I think select consumer electric stocks will do very well. So Havels is one of my top pick. As a disclosure, that is under our coverage, and I own that stock. The second would be a stock like Marico, where again the margins and the management are very, very confident of growth. So be selective, try and pick up, but there are always going to be good names which you can make your portfolio. Hence, either do your research with your respective RM, or if you have an account with IFL Securities, we can guide you. Or thirdly, pick your mutual fund correctly, which has exposure to a basket of stocks. But whatever you may do, Nandita, you have to be invested if you want to enjoy the party.
All right. Lastly, any pockets that are your favorite aside of the defense and railway stocks? Any other pocket, perhaps in auto, metals? Any thoughts there?
So I'll give you five names, and as a disclosure, we've been relatively outperforming these. We think they can outperform. Top of the line is Reliance. Second is Apollo Hospital, which I suggested to you closer to 48.50 also. We think Apollo Hospital average revenue per operating bed and the guidance of 15% is very, very strong. Thirdly would be a company like Vedanta. I think this overseas listing on London, then they already have a presence there, will make them have cheaper access to capital, which can improve their ROE. And Vedanta is a sum of parts of everything put together, from aluminium to copper to you name the commodity, it is there. Fourthly would be the stock which I just mentioned, Havel. And my dark horse play, which I gave you at 90, is Tata Tele, TTML. That stock is headed to 140. Don't ignore it. Tata's consumption facing company is this, which is offering everything on from ICT to cloud computing to Zoom. Everything is there in Tata Tele TTML. So that would be my dark horse for this Diwali to next. You could see a 50% upside.
All right, 50% upside, extremely optimistic view coming in from Mr. Bhasin. With that, Mr. Bhasin, thanks a lot for taking out time and joining in this afternoon and sharing your thoughts with us.
Thank you.
Let me also bring on board Gurmeet Chadha of Complete Circles joining us on the phone line. Good afternoon, Gurmeet. Thanks a lot for joining in. Your initial thoughts, we've finally managed to clock that 20,000 mark. It took 52 sessions, in fact, for the Nifty to conquer that level decisively. What are your next thoughts? Where are the markets headed from here? What are your thoughts?
Yeah, good afternoon and thanks for having me. I think it was more a question of when it will happen. I don't think so anybody had a doubt whether it will happen or not. Obviously, the last run has been very swift, especially the movement in mid and small caps along with Nifty scaling 20,000. It's a very sharp movement, especially in the mid and small cap space. If you see Nifty's up YTD about 8-9%, but the mid and small cap index are almost up more than 25% each. So that just tells you, how broader has been this particular run up in the market. But with every milestone, like I always say, when a batsman hits a century, he takes a fresh card. With every milestone, it needs to be celebrated. At the same time, we probably need to take a fresh guard, evaluate opportunities, evaluate if there is any froth building up in few pockets, and then take the next because at end of the day you have to be on the pitch to score runs. So rebalancing, focusing, getting back to asset allocation, getting back to basics is what I would urge each one of you to look at, and not just get carried away by the euphoria, because the bigger mistakes happen when things are euphoric.
Right, a bit of a cautionary note there, but which are the pockets that one should be invested in at the current juncture? We've
Sure.
seen some of the construction names like L&T at record highs. Power stocks have been, driving the rally from the front. The likes of NTPC, Coal India, even some of the IT names have started participating. HCL Tech, for that matter. Where would you say one must remain invested at the current levels?
So, few pockets which I think we are in a structural uptrend. I've mentioned this earlier that India is now in a proper investment capex cycle. It is something very similar to 2003-07. And this is led by government spending, revival in housing, and a lot of factors. So I think so when you play the investment cycle, these cycles are long in nature and they do not last 3-4 months. You have to play it for a 5-year or a 10-year period. So, for example, in 2003-07, since you took L&T outperformed every other company, which are today's some of the favorites of the market. And then L&T did not do anything for almost 7, 8, 9 years, right? And if you see their commentary, a third of their order book is private, which was just 20% 18 months back. Just tells you that, the capex cycle is picking up, other than obviously the order wins they are getting in hydrocarbon as well as infrastructure. So pretty constructive on that entire space. And you can play it through, the capital good players like L&T and others. You can also play it through power, which is, a proxy to investment cycle, both in terms of demand of manufacturing as well as, electrification and other infra work which is happening in the economy. Also some utilities, the valuations are still reasonable. So that's one pocket we like. We also like this entire housing, especially the home improvement theme. So we like the building material space, especially cement, cables and wires, sanitary ware, tiles, etc. We like the entire space. The balance sheets are looking very solid. We are seeing movement from informal to formal. And overall things look pretty good. And we also continue to like some large banks. While there's been a very big rally in the small mid-cap side of the market, some of the large banks are still very reasonable. HDFC trades at, on a consolidated basis, 2.2 times book value, 14-15 times earnings. I've never seen HDFC so reasonable. Then you have even some of the PSU banks like SBI being a little soft, considering the way other banks and smaller NBFCs and digital lenders have run up. So I would probably be a little more biased towards large caps, blue chips, who haven't really participated, in terms of now chasing risk-adjusted returns as valuations turns, pretty rich.
So would IT feature on that list, Gurmeet?
Yeah.
We have seen HCL Tech do well, but what about the Infosys and TCS going forward?
So selectively, yes. I personally think we are probably another quarter away before the deal win starts looking much better. It's become slightly better if you see the recent announcements which have come in terms of companies bagging more deals. But in terms of our interaction with CTOs and some of the senior people we interact with, it is still not as good as what it was. So it's picking up a little bit. So if, let's say, a company wins $1 billion contract, the company is saying, okay, let's start with 100 million, and then, as things improve, we will phase it out. So I don't think on the long-term basis deal making is a problem, but in terms of execution, in terms of, funds being available, in terms of timelines, you could see a little more long-drawn cycle. And my sense is probably you are another 1 or 2 quarters away, but some of it came in the price. There was so much negativity that you got something like HCL and Tech Mahindra at 12-13 times, when the correction was quite steep a few months back when results were soft. So you have to be more selective here, right? You have to see which company is actually able to come out, and also in terms of geography. So we like HCL, we like Infi, we also like some of the mid-cap, small-cap names. We also like some of the ERD names which have done extremely well despite this drawdown, like KPIT, etc. So you got to be more selective. I think the larger cycle probably, in my view, will take a little more time.
Right. When we talk about large caps, let's talk about Nifty valuations as such. 19 times FY24, forward PE. More room to grow here, or would you say that valuations may be a little more stretched given the fact that, we are at lifetime highs now?
I think we're a little more on the fair plus zone. I won't call it expensive, but, on this high, you're not at like 24, 25 times. This is probably, if you see the previous high, which was 18,800, we were 26 times. So the earnings have caught up, quite a bit in last 18 months. So if you look at it in perspective, the last high was 18,800, 18,900, and now you've become 20,000 after 18 months. So for like 2 years, if you see, the index returns is not obnoxious. It's reasonable. So I don't see we are very richly valued, and there's bubble building up across the market. Yes, there are pockets. There are a lot of fashionable themes which you must avoid, because anything which becomes fashionable is where you tend to make mistakes. And I keep saying there's always question outperformance also. We keep questioning underperformance, but if you question outperformance, accidents don't happen. And investing is as much about risk management and preservation as about maximizing returns. So be in pockets which are good but are probably going through a slightly subdued phase. Be overweight, have some margin of safety. Also be mentally prepared that if I enter now and if I am I okay losing 10-20% if things don't work out my way in terms of individual stock pickings. I think that mindset also is extremely important as you keep reaching new milestones.
Right. Pharma, did emerge as a dark horse this year, because start of the year it wasn't really doing all that well. Then it started picking up, and then of course there are talks of promoter stake sale. In fact, in Cipla as well. Lots of players in the fray to buy out promoter stake there. So, what are your thoughts on the entire pharma basket now?
No, it was quite under-owned, some time back before this leg up. In fact, I remember the entire weight of pharma was less than 4% in Nifty, which is very unusual, right? And so, initially it started with US generics picking up, and it was branded pharma, like the likes of, Cipla, and Mankind had a very good listing. And then you have hospitals doing very well. And this is one segment we really like because, we have 30 crore people who are 50 plus. And this population, this segment, while it's a young country, but in absolute numbers, even the old age segment, if I can call old age, also increasing significantly. And I think that healthcare services will get a lot of prominence. And I think there are a lot of hospitals who are getting their, capital allocation strategy right. So that space we like. We like diagnostics. We like branded, India-focused branded generics, within pharma. It's a quite wide space. So again, as I said, for IT, you got to be more selective. And then this CDMO API space, there's some companies who have molecules now in phase 3. We saw what happened to Newland when they got things right for themselves. I think a lot of stuff is going to happen. It's a very lumpy business because once you get a molecule right, you certainly can add $100-200 million to the top line on a quarterly basis. So that's another segment which is worth looking. But you need to have a slightly longer horizon. But valuations have caught up. So hospitals, most of them trade at 50 times. Even on an EV/EBITDA basis, they are rich. Branded generics, again, the valuations have gone up. So again, be more selective. It's not that the entire pharma will again really start doing well.
All right, couple of more questions. I cannot not ask you about the entire railway and shipbuilding rally that has been playing out. Of course, there has been announcements over the weekend at the G20 as well, which has, of course, which will bode well for some of these Indian railway companies. But would you still say that some of them may have run ahead of the fundamentals now, even though, there have been order announcements, there could be some orders being awarded to some of these companies like RVNL, and IRCON, etc. But would you say that there is just too much euphoria even ahead of the orders being awarded?
Yeah, I think in large pockets, broadly, yes, barring a few exceptions, because these orders are very long gestated, and a lot of the good news is probably getting into the price now. But there are some names we track, but in general, I agree there is some euphoria there. So there are two names we track more closely. One is Titagar, because it has 3 business segments. So both in terms of wagons, they've upped their capacity. They have a very good order book. For coaches, because of Vande Bharat, their capacity has again gone up 2-3x. And then they have a tie-up with RK Forgings for the forging wheel. So that space, we think, the execution and gestation period is a little shorter, and you can see visible results of orders playing out in terms of free cash flows. So that's one space we like, but again, that also has run up quite a bit. And the other one which we actually missed was the market borrowing arm, which is IRFC of the railways, which is the market borrowing for for the wagons, coaches, everything which is done, which we call it rolling stock, and also does the infrastructure leasing work for the railways and the government. So that's another space we are tracking, but we are not buying because the run-up has been too sharp.
Last question to you, Gurmeet. I mean, it's been a year of milestones when it comes to India. Of course, GDP growth remains robust, even against the backdrop of, challenges in the global economy. We've seen the success of Chandrayaan-3. We've, in fact, we have a solar mission as well. We have AMFI data that came out today, has been fairly good. In fact, equity inflows have nearly trebled.
Yep.
In the face of all these positive, happenings, at the risk of sounding a little too cautious, do you think there is anything that could, perhaps slam the brake on this rally? Any negative news expected or anything that could derail this rally? Or do you think this rally is here to stay and perhaps till about New Year, or would you expect some kind of correction going forward?
I think, every rally has its intermittent corrections. Even 2003-07, which is the best ever I have seen, had 130% correction in May and June of 2006. In fact, I remember it was 12 June 2006, market actually had a lower circuit. It fell, Sensex fell 11% in a day. So all rallies, any correction is integral to rally, which is if you pull out any data for last 20, 30 years. I think there are two broad risks I see. One is oil really inching up beyond 90 and crossing 100 and maybe slightly higher. I think that's one risk, the markets may not like. The second is the US have tried again raising rates because, the yields in US are upwards of 4% on 10 years. It's almost 430. And if you get like 4-5% on US Treasury in dollar terms, it does attract flows and leads to outflows from emerging markets. So I think these two things we need to be slightly wary of, careful of. Other than that, as I said, there are few pockets where there's a lot of froth building up, some in small micro caps, some in some of these things, but that's not in broader markets. So just, these are the two things we need to be a little watchful of.
All right. Last, I know I just told you that I'll be asking you the last question, but lastly, what would you advise investors to do at the current juncture? Would you advise somebody to go all in? Would you advise somebody to sit tight? Or maybe would you say this is the time to perhaps take some profits off the table?
Yeah, so, personal finance, I keep saying, is more personal than finance. So I think you have to have a more balanced approach right now. Maybe on equities, you can be a little more biased towards large caps, more biased towards Nifty stocks, which haven't done too well. And that, give yourself some margin of safety in terms of, not falling as much if market corrects. Secondly, have some exposure to bonds also. We are probably at the peak of interest rate cycle. And so if next 2 years, probably you will see the cycle getting reversed, which will give you some MTM gains. So have a very balanced approach. And if your portfolio is extremely overweight small and mid caps and micro caps, and let's say your 60-70% portfolio is that, there is no harm in probably taking 10-20%, off the table. But don't take extreme calls. I think the mistake we do is go all in or all out. And I think the market just tells you that you have to be in there, to make money and take some drawdowns up your chin. So rebalance. Don't take extreme calls in terms of, going all in and all out.
All right, Gurmeet Chadha, that's the view coming in. Thanks a lot for taking out time and joining in this afternoon and sharing your thoughts with us.
Thank you. Thank you. Always a pleasure. Thank you.
Thank you. Well, with that, it's a wrap on this closing bell. But of course, we have clocked that, in fact, conquered that 20,000 mark. The bulls are having a gala time. Things are working well in favor of India, and looks like this rally is here to stay according to experts. But of course, it's a goodbye from me. Thanks a lot for tuning in. Of course, I'll be back with the markets at 8:30 a.m. tomorrow, so don't forget to tune in. But of course, for all your news and other financial updates, stay tuned to Money Control.